Thanks, Leonie. She didn't mention my other experience with Brian Law. So I'm the John Clark character. My name is Catherine Nance. So unfortunately, Catherine couldn't make it. So I will now work through just the highlights of the paper, because the paper's been out for a few months now. We did do workshops in Sydney and some other discussions around town. I'll just go through the highlights. I'm assuming people have read to some extent the paper, and then once I've got through that, we'll sit down and answer any questions that people might have. So just to start, when we started looking at housing, or the housing working group of the Institute, we came from this point of view that the retirement income system has its three primary pillars, but there's also the housing wealth that's generally excluded from all of that, thinking about it or modelling around it or what to do with the assets, etc. And what is quite important is when you look at the income in retirement, the OECD study, it did show that in retirement, the incomes that Australians are taking and living on of the group surveyed was the second lowest, just ahead of Korea, behind Mexico and just ahead of Korea. So we're a country that's asset rich, but retirees are income poor. And one of the biggest assets that sits outside, and probably the fourth pillar that should be considered, is housing. And we then worked through to look at, firstly, how important is housing as an asset pool, as a store of wealth, or as an accumulator of wealth for people who will move into retirement. In the older age groups, the baby boomers, me, Colin Grenfell, who I can see sitting back there, quite high home ownership. We've also benefited quite strongly from interest rate falls over the last 20 odd years, which have driven up capital values. If you look at the over 75s, in fact, it's the bulk of their wealth is actually tied up in their home. We also considered from the point of view that the family home, the housing, is also a tax-advantaged asset in that it's not taken into account for the means test in relation to the age pension, and it's capital gains tax-free should you sell it. So it is a tax-advantaged asset. And if you I just reflect on some of those, if you look at the income groups, this is from the other paper we did earlier last year of Richer for Poorer. You can see the chunk that is housing. It's the green bit on top, and particularly for the older groups, quite significant. So, what is housing being used for? How do people see housing within their portfolio of assets? Clearly, it's not just an investment. It is actually a place to live. It's a place that generates the security, the feeling of comfort, etc. It's the place that keeps you close to your community and your friends and your family, etc. So that's an element that overlays this asset, which doesn't really overlay the other assets. It's as we've looked there, a significant store of wealth. And to the extent that people don't use it, won't use it, or can't use it, it can result in a lower standard of living in retirement because they don't release the capital value. And then, in fact, they live a less, I hate to use the word affluent, but they lead a less comfortable lifestyle and then end up with a substantial asset that's then passed on to their children. There's also places where the asset value is actually used in an informal way. The children look after the parents in the house, and when the parents move on, the children get the house. So that's the asset value is being passed on. It obviously pops up in bequests, either intended or unintended. And when we look at, are these assets actually being used sensibly, or being used to generate the income? Sensibly is a bad word, because some people, sensible is not to use it. And we actually see that there's a fairly low incidence of equity release schemes. And part of the problem with this is on the demand side, and part of the problem is on the supply side. On the demand side, people find it risky. The products that are on offer are complex to them. They see risk in things like reverse mortgages. Also, if they release assets, if they get assets in cash or in some sort of financial asset that they can then use to spend, all of a sudden it is now accessible under the means test. So they're in not a terribly different position. They've just got a more liquid piece of their asset, but all of a sudden there's essentially a fairly high marginal tax rate on it because of the means test. On the supply side, there's the obvious problem. Reverse mortgages have exactly the same difficulty for a bank as a lifetime annuity has for a life insurer. There's massive longevity risk in it. So therefore there's margins in it to cover that, which adds to the price. Also, this market is really quite tiny. It's minuscule compared to the normal mortgage market, and therefore even within the banks who do it, it's not their biggest priority because it's just not generating enough revenue to cover the costs of what's actually a much more complex product. So there are things there, there's disefficiencies in the system which need to be looked at if we are to improve the capacity of people to use the value in their house. The Productivity Commission, in a very, very good paper, which did get buried because of one recommendation they made, which we'll talk about in a second. It is worth, if you haven't read it, it's worth reading it. They actually went out and surveyed older people with houses. And that's the findings. I won't read them all. But 75% want to remain in their home through retirement. The bottom one's the other important one. A significant group of them are very, very uncomfortable with going into debt in retirement because they see then, at least if they were working and they went into debt, there was some capacity you could work a bit harder or do within things that you could uncover your debt position. When you're in retirements, particularly at older ages, they just feel that's a bit too risky because if the debt sort of gets out of hand, then what do they do with it? And does that just mean the house gets taken away from them? Just looking at high-level needs, we can debate this for a couple of hours as to what all the needs are in retirement, but fundamentally, expenditure needs to satisfy your lifestyle as comfortable as you can make it. The ASFA standards for the comfortable lifestyle, $58,000 a year for couples, $42,000, $43,000 for singles in the 65 to 85 age group. Slightly different on their surveys above age 85. But those surveys are done for people who are homeowners. They don't do the similar thing for people who are not homeowners. And when we looked at it, really the view is that people who don't own their own home would need about another 30% on top of that to be able to service their rental load. The other part of what people in retirement have to deal with, so that's buying things, looking after yourself, maintaining your lifestyle. There's also the need for accommodation, aged care and health costs. In the aged care area, with the new rules that came in 2014, essentially accommodation, whether it's at home with care coming in or in a home, in a facility where the care is delivered, the cost of that is an individual responsibility, not a government responsibility. Government is there to provide a safety net on the one hand and to cover the health costs through Medicare. The numbers are reasonably substantial, and this then is an area where particularly housing can come in, because there's quite a substantial group of retired people who see the housing asset as this is what they'll use to pay for aged care or long-term care if and when they require it. In looking at our proposals on behalf of the profession as to what could be done about this or how the system could be improved, our focus was it needed to be things that would provide a better standard of living in retirement. That's the focus. The focus was not about how do we reduce the cost to the government, how do we improve the age pension system, how do we do any of those things. Some of those things may be a consequential outcome, but that wasn't the focus. The focus was a better standard of living in retirement, and we then looked to provide recommendations that would remove biases, inflexibilities, all the frictions in the system to make it as easy as possible that people can use this asset should they wish to. So it was on the basis that the recommendations were to put things or structural system things in place that allowed people to do it if they needed to and if they wanted to, but there'd be no coercion or encouragement or discouragement, a neutral position, but to make the system more efficient and provide a better standard. We also took the principles which the Institute has, or on behalf of the profession, set up in relation to retirement incomes generally, which is sustainability, flexibility, equity, both intergenerational and horizontally within the generations. It's got to be efficient, specifically in relation to public expenditure, so that if there is public expenditure, there's the best value for money delivered. It must be as simple as possible. Now, the fact that it's a whole bunch of actuaries talking about it tells you that it's not actually that simple, but it can still be made as simple as possible. And that it also needs a supportive regulatory framework which helps these things be efficient and reduces the risk and the decision difficulties for the participants. So the reform options we put in the paper, taking that into account, that the means test should provide some form of protection for the asset value that's released from the house. Should people wish to downsize, reverse mortgage it, do whatever they want to do, some form of equity release. Because without it, people don't, and the government pays the means-tested pension as it is anyway. So this would simply result in a better and more efficient system without any change necessarily to the government outlays. Similar things occur with where people use downsizing, because if you reverse mortgage it or some of these fractional property sales, you don't actually trigger the big stamp duty, but if you downsize, you move from a bigger house to a smaller house, you get caught by commissions and stamp duty. And we looked at a number of possibilities there to have, for instance, the stamp duty turned into instalments as opposed to a big lump sum at the front, or so essentially a land tax version. A range of things there that could potentially be looked at. We didn't have any particular prescription as to exactly what it should be. There's also some diseconomies or some frictions in the system relating to bank lending, where retired people who don't have an income and therefore have difficulties getting credit assessments based on income because they don't have any. To get those looked at, changed, there's some APRA requirements, etc., that would make it easier to provide bridging finance and other lending. The private equity release schemes, again here one of the issues is regulation. So certain forms of this, like reverse mortgages, are highly regulated because they fall under APRA, they fall under ASIC, they fall under the ACCC. There's all sorts of stuff that goes into a reverse mortgage. However, when you get down to some of the equity release schemes where you pledge a bit of your house to some pooled unit trust and other people, there's essentially no regulation on it, particularly to do with things like not being able to force people out of the house if the equity value disappears. And potentially they also look at the level of, or the types and level of financial advice that's provided to these people by distributors or advisors. Another element that did come up is the financial abuse of older Australians. A lot of this does occur around the house, the big asset that's sitting there unused. A lot of it, unfortunately, occurs within the families as well. So we did think that there was, and this is a broader, it's part of a broader discussion about financial abuse of older people. That should be also on the agenda to ensure that the whole structure around it also feeds to some extent into the forms and type and licensing of advice. The homeowners versus the non-homeowners, there is definitely a bias in the system against, in favour of homeowners and against renters. And the way the means test works, the assets means test, there is a slightly different thresholds in the assets test for the means test for the age pension, but it doesn't really compensate for the extra cost that people will incur by not having a house of their own to live in. So it's definitely biased in favour of homeowners. We've also suggested, without picking a value, and this is where the issue of the Productivity Commission comes in, that there should be more thought, some more investigation looked at potentially having a cap on the exemption of the family home from the assets test. Now, this is a horribly complex area. The Productivity Commission came out and said the home should not be exempted at all, so the cap is naught. The debate that followed then in the press and everywhere else, in fact, nobody read the rest of the report, because that's what all the discussion was about. And that was a consideration we had as well in putting this together. We did not want to put something in which would then just divert the debate, the discussion, the analysis from the necessity to look at a range of things in this area to improve the efficiency and the operation of the market in relation to housing assets. So we've put it there as, if you like, a little political hot potato, but it probably does need to be looked at. And then some government measures. Again, these are not coercive type measures. Changes to the rules which you already mentioned in relation to equity release schemes, making sure there's a common platform for all, or common legislative framework, regulatory framework for all forms of equity release, not just mortgages, not just reverse mortgages. Possibility, probably unlikely, of some government type systems, at least for certain parts of the community. So overall, those were the, if you like, 6 primary recommendations to improve the efficiencies and effectiveness of the system, to then provide a basis upon which us as a profession and the community can have a more meaningful discussion then as to how to use these assets to improve the lot of people in retirement. So That's all I have.